I sure hope you're ready, guys. We have another big week for stocks coming up here, and we have 7 companies, 7 stocks to break down in this video, all of which are about to report earnings. So we're going to break down the estimates for EPS, revenue, the charts, what I'm looking to do, the whole 9 yards. But first, guys, hit the like button. Do not forget to subscribe. Come on and get your 30 stocks from Moomoo. Open up your account using that link down below. Deposit at least $100. You get 5 free stocks. Deposit at least $2,000. You get 25 more stocks, and your uninvested cash now will earn up to 8.1% APY. So get on it, guys. The deal's running out in about 2 weeks. So use that link down below or go to stocksurfs.com/Moomoo. And with that being said, cheers. Take a sip of your coffee, guys, and let's dive into it. So we had a pretty good day for stocks on Friday, which I haven't said that in a couple of days, right? It's been quite the bloodbath, right? But we had a nice bounce back on Friday where we had SPY go up 0.5%. Same with the Dow, the Russell, pretty much the same there, and QQQ went up 0.75%. And looking here at SPY quickly here, guys, before we dive into these 7 stocks, we can see we are maintaining 565 to 575 as support as of now, at least, which is a good sign considering that has been support the last couple of months, ever since the beginning of November. So if we fall through this point, guys, things might get uglier in the short term, but as of now, the fact that we are seeing buyers coming in, we have a slight bullish divergence here on the 4-hour chart. That's a good sign for the bulls here in the short term. And on QQQ, it's pretty much the same thing, right? We're holding the lows from the end of October, early November. We have a little bit, slightly of a bullish divergence forming on the RSI on this 4-hour chart. Maybe a rebound's on the horizon here, guys. But of course, it could still go either way in this type of market that we're in. The VIX is very elevated. It's at 23 points right now. So the levels I'm watching are 485 on QQQ, the lows from November for this week, and on SPY, I'm keeping my eyes peeled on 565 to 570, 575, that $5 to $10 window. So with that out of the way, folks, let's just get into it. The meat and potatoes of this video. Stock number one is Oracle, and they're reporting in the morning, tomorrow on Monday. Let me double check that though. Actually, no, not in the morning, after the bell. Either way, tomorrow on the 10th of March, guys. So Oracle is going to kick off this week in terms of the one of the biggest and most important companies to watch out for. And we can see it is fairly beaten up in the short term. In fact, it's down just about $30 per share in the last 2-3 weeks here, and from all-time highs 198 to 155 is where we're at now. We are now down 22%, so we're in a bear market now heading into these earnings tomorrow after the bell. And again, we're fairly oversold here, and their earnings per share estimate is $1.49 versus $1.41 from last year on revenue of $14.39 billion versus $13.28 billion from last year, up around 8.3% year over year. That's the projected growth rate for Oracle here, guys. And again, it's oversold. For this stock to go even lower and take out the lows from the middle of January being about 150, earnings would have to be pretty disappointing, or at least guidance would have to be pretty disappointing. And then maybe we go down to 135, 140. We shall see. But overall now, guys, it's a bit oversold, but who knows with earnings coming up. And I'm not the biggest earnings trader. You guys probably know that. I'm not, loading up on calls or puts or buying a bunch of shares of any of these stocks for that matter right before earnings. But I will be eyeing them up once the numbers come out and once we get some more distinct price action in the stocks. So Oracle is on Monday after the bell. We also have Adobe, which this company, I know investors are begging and pleading for some good news because last time they reported, man, this stock collapsed. I mean, this thing went down from the mid 500s all the way down to 430 in the week or two after the company reported earnings. And then in the month or two after the company reported earnings, it got down to $400 per share, guys. That was a 30% drop, and we really have not recovered since then. So it's clear that Adobe is waiting for earnings, right? We need a catalyst to push this thing. And I don't know, maybe if earnings struggle again, it could be going right back to the 400s, low 400s for all we know. Again, considering the last two times they reported, the stock tanked, right? Is third time the charm? Is this the time it's going to rebound, or is it going to collapse again? We shall see, guys. But EPS estimate for Adobe is $4.97 versus $4.48 from last year on revenue of $5.66 billion versus $5.18 billion from last year, up around 9%. So growth, of course, in Adobe, the company, it's slowed down over time like any maturing company, but it's still decent, 9%. And if guidance is strong, expect a rebound here, guys, or at least that's what I'm expecting. You trade at your own risk, as always. So number 3, we have Dick's Sporting Goods. DKS is the ticker here, guys, and they're on... Wait, I forgot to tell you what day Adobe's on. Hold on. Let me see what day Dick's Sporting Goods is on. They're on Tuesday in the morning. Adobe is on... I think Wednesday, but let me double check that. Wednesday after the bell, so keep your eyes on that time period for Adobe. And Dick's Sporting Goods, guys, is also down here. Shocker, right? It's down $40 a share, 17% from the recent high. And the chart actually looks pretty good. We're oversold. Pretty good setup here if the numbers are good for a rebound, right? We're at the bottom of this channel. So I'm curious. I'm curious to see how, we rebound, or if we rebound this upcoming week and continue the double bottom breakout that we're kind of seeing. You guys see we double bottomed last week at about 203, 205. So let's see if we can follow this with a full-on breakout. But of course, it all comes down to earnings on Tuesday. So DKS, their EPS estimate, and by the way, this company is struggling year over year, guys. EPS estimate is $3.51 versus $3.85 from last year on revenue of $3.77 billion versus $3.88 billion from last year, down 2.7%. So if they somehow grow revenue year over year, despite analysts having them not do that, right? If they grow it, if guidance is good, expect a rebound in the stock, in my opinion. So number 4, we have DocuSign. DOCU is the ticker. This one is actually up a lot over the last couple of months, 6 to 8 months. But in the last 2 to 3 months, it's down from $108 to $79. We're down a good 25-30% here. And they're on, I believe, Thursday. Let me double check that. Yeah, Thursday the 13th after the bell. So DocuSign, their EPS estimate is 85 cents versus 76 cents from last year on revenue of $761 million versus $712 million from last year, down 2.3. Wait, did I read the wrong line? Hold on a second, guys. I'm screwing my notes up here. Let me go back. 85 cents versus 76 cents from last year. I think I got that one right. Revenue, $761 versus $712 from last year, $1 million. That's up 7%. So there we go. DocuSign is not growing nearly as much as it once was. And I'm not obviously I know what DocuSign is, but I'm not too familiar with the numbers these days behind this company. Quite frankly, I haven't researched them in a while, but I do know for sure they're down big time. The stock is from all-time highs. Doesn't Kathy Wood love this stock? I don't know why she's obsessed with it. She loves stocks that I just don't agree with. Some of them at least, Docu, Roku. I hate that stock. We're not going to get into that rabbit hole in this video, guys. But yeah, let's see, man. Maybe DocuSign rebounds despite us seeing a death cross, despite us being at a couple-month low here. Let's see if earnings and guidance are enough to push this thing higher. So Ulta, I think I read off some of the Ulta numbers before this, right? But Ulta is getting demolished, guys. And I used to own this stock about a year or two ago. Thank God I got rid of it. Holy smokes. This thing is beaten up like crazy in the short term. But that could be setting up for a rebound, depending on these numbers. You guys can see we are down $100 a share, or about 23% from the recent 460 high. And they're reporting earnings, I believe, on Thursday, the 13th after the bell. And their EPS estimate is $7.12 versus $8.08 from last year. That's down. And revenue is, let's see here, guys, 3.47 versus 3.55 billion. That's down 2.3% year over year for Ulta. So you notice Ulta, Dick's Sporting Goods, although they're different businesses, but they're in retail in general. They're not doing well. They're struggling. I'm pretty sure Best Buy is struggling. A bunch of these are just getting hit year over year. That's just the reality. And Buffett owned Ulta for a little bit. I'm pretty sure now he's completely out of it, or he trimmed his position big time. I have to double check on that. But Ulta, the chart looks decent. I'm not going to lie, but we're not really getting the confirmation of a rebound yet, which is what I'm watching for this upcoming week. And I would like to see it personally get over 375 for any signs of a reversal. And now we're at 355 to give you guys perspective. So I'd like to see it break out of the highs for March, from the end of February, before even considering this thing for a swing trade. So before we go into the last two here, guys, make sure to join the free email list. Join the 3,000 other people we have, where I send out my top stocks weekly, again, for free, right to your email. It's a quick read, nothing crazy, guys. And again, it's free. Use that link down below. You might as well do it. Put your first name and your email address. So Dollar General is also this week. They're on, I think Thursday. Yeah, Thursday in the morning. And man, this stock's actually starting to break out. This one looks good. It went up 7% on Friday. Now we're at a multi-month high, for that matter, on Dollar General. We actually took out the highs from the end of February with this move on Friday of 7%, and I'm not sure why it went up 7%. Citigroup maintains sell on Dollar General. Okay, interesting. $69 price target. A lot of these firms have a sell, or maybe just Citi. UBS has a buy. They actually upped their price target, or cut it to 95, but they still have a buy. Either way, I'm eyeing it up here. I like the momentum that's starting to build up here. Volume's kicking up, heading into earnings on Thursday. So DG is reporting, expected to at least $1.50 EPS versus $1.83 from last year on revenue of 10.26 bill. Making sure I'm reading the right line here in my notes, guys. 10.26 billion versus 9.86 billion last year, up 4%. Not bad there for DG, up 4%. Revenue growth projected year over year. I'll take it. And again, it is starting to break out. Momentum's building up, which is good. So last but not least here, folks, UiPath, ticker symbol PATH. This company is on, I think, Wednesday. Yeah, Wednesday after the bell. And their EPS estimate is 19 cents versus 22 cents from last year on revenue of $425 million versus 405 from last year, up around 5%. That's the projection for UiPath here, and it's beaten up. It's very beaten up, guys. It was holding trend for a little bit here, a couple of months, which did look good. But it looks like the recent stock market debacle, whatever you want to call it, made it break trend here, which I'm not loving. It broke through this channel. You guys can see clearly right here, right? So in my eyes, we got to recover back over $13. If this thing recovers back over 13, gets back in that channel, then it's back in play. But for now, I'm staying away until we get earnings, of course. Again, I'm not an earnings trader. and until we get the pop over 13 here on PATH. So what do you guys think? Let me know your thoughts in the comments. Smash the like button. Don't forget to subscribe. We're on the road to 100K subs, and get your 30 stocks from Moomoo. Deposit at least $100, you get 5 stocks. Deposit at least $2,000, you get 25 more stocks, and your uninvested cash now will earn up to 8.1% APY. Guys, get on it. You have a couple more weeks to do it. Use the link down below or go to stocksurfest.com/Moomoo. And with that being said, cheers. I'll catch you in the next video.